All right, ladies and gentlemen, welcome back to the channel. We have a lot to get into in regards to AMC stock and what's going to be happening in the broad markets this week and as well as next week, because you're going to have a lot of economic data towards the end of the week that could move the markets. You're going to have Microsoft and Tesla earnings this week, and then next week you're going to get your Apples, your Googles, your Amazons, your other large tech companies that control a vast majority of the market. So these next 2 weeks are going to be massively important. Also, just the cherry on top, you have the Fed meeting next week on February 1st, in which that could also move the markets in a huge way. This is going to set us up for AMC earnings, which I do expect a very positive reaction after earnings. Historically, don't let me fool you. Historically, earnings are not bullish for AMC. Historically, AMC does fall after earnings, but they have always rallied 2 to 8 weeks after earnings. There's the initial sell-off and then that post-rally that does occur, guys. So we're not going to talk about that as much here in this video. That is a topic for another video, but we need to get into what's going to be happening this week because you guys need to be ready. And at the end of this video, we will give you guys a price prediction for AMC this week. And it's a little bit harder this week because there's a lot that can drive the market. So let's get into all this information. Hit that like button and subscribe to the channel if you like anything that is said in this video or you get good information out of it. Maybe you learn something and you want to stay up to date with what's going on in the markets and with AMC. So first things first, we are going to get into the technicals, all of that good stuff, but I do want to start with the economic data for this week because this, as well as earnings, they're just wild cards because you really don't know what this is going to come out at. Like, there's so many different data points on Thursday and Friday. There's nothing in the beginning of the week, but Thursday and Friday, there's so many different data points that all have given us big reactions in the markets before. So it's a little hard to say. And then you have earnings, which that's either going to be much better than feared or it's going to be much worse than feared. So let's get into the economic data first. So 8:30 in the morning on Thursday, durable goods orders month over month for December. You're expecting a positive 2.2% reading. Last month was negative 2.1%. So it's important to understand that in 2022, especially the second half of 2022, the markets wanted bad economic data to kind of slow down the Fed. Well, now you're at this point where a recession is worse than the Fed continuing to raise rates. And they both go hand in hand, right? The Fed continues to raise rates, leading us into a recession. Like that's a well-known fact. That's going to happen. The Fed has never pivoted in the past or AKA cut rates without a recession. So if the markets are pricing in, the bond market specifically, rate cuts by the end of 2023, that means mid 2023 is going to get pretty nasty. If it does not, the Fed will not cut rates. Again, that's a topic for another video, but long story short, like you seen last week, bad economic data is no longer good news for the markets. Bad economic data is no longer sending the stock market higher. Bad economic data is again reacting as bad news for the market. So you are expecting durable goods orders to go up quite a bit month over month. If they do not, it's going to be a bad thing. GDP growth rate quarter over quarter, advanced estimates for Q4, we're expecting 2.7%. Last reading was 3.2%. So you're expecting a lot from GDP. You're expecting a lot from durable goods orders. That has me a little concerned. Now, initial jobless claims comes out January 21st or for January 21st. 8:30 in the morning as well on Thursday. You're expecting 202,000 initial jobless claims. Last month's reading was 190,000, so it did surprise to the downside by about 15,000. The original estimate was for 205,000. So we'll see what happens with that. I don't know if initial jobless claims is going to even cause a reaction in the markets. Probably going to be durable goods orders, but more importantly, the GDP rate that also comes out at the same time. Now, you're also going to get PC prices quarter over quarter advanced data for Q4 as well. I don't think that will be as important because you get core PC price index month over month for December coming out on Friday at 8:30 in the morning. You're expecting a 0.1% increase. Last month was a 0.2% increase. So if PCE goes up, that's going to be very bad. That's the Fed's preferred method of evaluating inflation, right? Personal consumption expenditure index. So if that goes up, obviously it's going to be a negative thing. Now, personal income and personal spending, these are going to be wild cards here, because on one hand, at 8:30 in the morning, you get personal income month over month. For December, you're expecting an increase of 0.3%. If this data goes up and people are earning more money month over month than expectations, that's going to be a very negative thing. Now, personal spending at 8:30 in the morning as well is expected to come down by negative 0.1%. So on one hand, you're expecting personal income to remain pretty strong, but personal spending to drop. And if personal spending does drop more than 0.1%, which I think is a possibility, that's going to be ultra negative for the markets, because if people are not spending money, that is going to kickstart us into a recession a lot faster than what economists expect, right? You could be on the doorstep of a recession. You could be in a recession. Obviously, different opinions of this will vary. A lot of you guys might say we're already in a recession. We've been in a recession. Look at the stock market. Look at the real estate market. Look at a lot of different markets. We're in a recession, and I would agree with you. But we obviously don't move the markets. It's the trading algorithms. That's why it's important to understand the expectations and follow the data. Ultimately, if you want to be successful in the markets, you definitely have to follow the data and the data releases. Now, at the same time as all of that data comes out on Thursday and Friday, you're going to get Microsoft earnings on Tuesday. You're also going to get a lot of other companies, a lot of well-known names. We're not going to run through them all, because I don't want to make this video like 25 minutes long. We could make a super long video talking about each individual sector that's going to be reporting earnings this week. But Microsoft after hours is going to be important. Why? Because Microsoft, they are cutting employees, right? And that is usually seen as a positive thing. But why are they cutting employees? Are they cutting employees because they expect revenue to slow down or earnings to slow down in the future? Or did they already go down the toilet quite a bit? So that's going to be a big question that will be answered on Microsoft earnings. Now, Wednesday after hours, sorry, you're going to get Tesla earnings. Now, we already know the delivery numbers were a record, so it's safe to assume that the profits, the revenue is going to be a record as well. Now, what's going to be more important coming from these companies is the forward guidance, and that is the real wild card of these earnings, because I don't necessarily expect Microsoft earnings or Tesla's earnings or any of these other companies to fall off a cliff. Like, that's going to be more than likely the middle of 2023. Next quarter earnings, probably going to be pretty pitiful. So what are companies saying about next quarter, the quarter after that, or just all of 2023? That is the real wild card here. But on a positive note that could set us up well for AMC earnings more specifically, is if earnings are better than feared, because there is quite a bit of fear heading into earnings. You even have Morgan Stanley's Michael Wilson saying that the S&P could fall to 330 based off of these earnings. That's a decline of like 20%. So that's a decent amount of fear. Usually economists, the top economist for 2022 at that, Mike Wilson, to say the market's going to fall 20% off earnings that are going to disappoint in a huge way, you might set up for a bullish reaction after some of these earnings. And that's what you should be watching out for in this next upcoming week. And especially if we do get a positive rally in the markets, AMC more than likely would play along, and you're at a critical level, especially on the technicals, guys. You have already rallied quite a bit, but AMC is approaching its longer term downtrending level of resistance. This line right here, you've got rejected at it multiple times, like 5 or 6 times, technically speaking. You've got rejected at that level. Now you're above the same exact level in which you found support after the January rally, heading into the June rally. So you're literally at the same level, and that is this blue line right here that goes across the whole entire chart, and you're approaching this major resistance level. If you break out above that, heading into earnings, that's, in my opinion, setting up for a pretty strong earnings report, especially if AMC can do what nobody expects it to do and post free cash flow positive numbers. That's going to be huge. Now, if you look At Earnings Whisper has a consensus estimate that AMC will post profits of 0.17 cents for Q4 of revenue of $1.21 billion, but the street is not expecting that. So if AMC can put up better numbers and actually show that they are making a profit, or at least free cash flow positive or EBITDA profitable, then that's what I think could actually get shorts to cover on their short positions. Not a gamma squeeze, not retail buying, not an analyst note, none of that. Shorts actually covering and give you a short squeeze. Now, that is obviously down the line. AMC reports earnings February 28th. But these earnings, this economic data is going to set AMC up in a better or worse way heading into their earnings. And that is why this is so important. Now, let's run through the Ortex data, give you guys a price prediction, and wrap up this video so you guys can enjoy the rest of your Sunday. So if we take a look at the live short interest of free float, you're sitting at 21.74%, still at pretty much a record high throughout all of 2022. Live short interest, meaning the amount of shares currently sold short, sits at 112 million. Cost to borrow average, 256.83%, cost to borrow max 327.96%, and cost to borrow minimum at 84.62%. These numbers are sky high, and that's also a big factor heading into AMC earnings. If cost to borrow rates remain this high, that can also help squeeze shorts out of their short positions, and I would imagine it's making them a little bit nervous, or a lot nervous, heading into AMC earnings. Now, if you take a look at Interactive Brokers short availability, that is sitting at 97.2% cost to borrow. So still insanely high from the live numbers we're getting from Interactive Brokers. Interesting flow sentiment. You had 3 orders totaling $9.52 million, positive order value of 0% on Friday. We did go over that. That was the April 21st $10 puts that the institutions were buying, and it looks to me that that's some kind of strategy to try to cover up on some of their short interest, right? To try to hedge out some of their positioning, because in the grand scope of things, I mean, AMC is at $5. It was at $3.77. Is it even worth making a big trade like that to see the stock maybe drop 50 cents? Probably not. So I think there is ulterior motives to that, but that is just really a tinfoil hat theory at best. Now, we take a look at the price prediction for AMC. I think it's going to be relatively hard to break out above this trend line, but I also don't expect a drop at the same time. I'm leaning more towards a neutral week, but again, earnings make me a little bullish, because just the expectations are pretty low at this point. We're expecting a lot of negative things to come out of earnings, but the economic data, I mean, that could be very, very bearish. So you have a lot of wild cards this week. I don't expect a huge move in either direction, specifically for AMC, because it looks so bullish. For an example, if you have a very bad week in the markets, I don't expect AMC to have a very bad week as well. We'll obviously see about all of this information, but if I were to go out on a limb and give a actual price target here, I would think about $6.50 to $7. Maybe a short-lived break above this trend line might be in the cards for us. And I think I'm saying that because we've gotten batted down at all times in the past. If we can break above this heading into earnings, that's going to be good. I'm not sure it's going to be this week, though. It might even be next week when you get Apple, Google, Amazon that report earnings. But I think your worst case scenario here is really targeting that $4.75 level. Really, that $5 level is so much support right now that I really don't see us falling under that. I again don't see us going above around $7 per share at the same time. But who am I? Just a random guy on YouTube talking about stocks he loves, and that is it. That is all. I'm not a financial advisor. I'm not a financial planner. Do not listen to anything that is said in this video or any other video and take that as I have a crystal ball or this is financial advice, because it is absolutely 100,000% not financial advice, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Most importantly, enjoy the rest of your Sunday, and I will see you in the next one.